Hello, everyone, to one and all who are invested in crypto, to those who are planning to invest in crypto, and to those who are a 50-50 into crypto and not so into crypto. This video will be very informative, so please do watch till the end on what all points I will be covering. I would go through a few articles. I will give you my insights, my analysis on what would happen to the crypto world out there in the coming days, in the coming months, in the coming years as well. So, this is Mr. Aslan coming out with a general video on whether crypto will be the future or the fiat currency will run over the crypto market right now. Having said that, let's begin the video. And again, before I start, this is done only for educational purposes. There is no financial advice involved from my side, or neither is this any financial advice. I'm not a financial advisor, also, right? I'm just a normal investor as everyone out there who wants to just make some money. So let's go ahead and deep dive. I'm sorry. So into what I want to show you guys today. So the first and foremost, let's check the market performance. It's around 8.17% down, expected on a weekend. I mean, it's a Monday here, and quite obvious people getting on after the weekend roll. This would definitely pick up. There would be a few no downtrends that might happen. Yeah, nothing much to worry. It's a correction that happens on a daily basis. It happens with crypto. It happens with the normal stocks. Happens with any other financial product out there. So, having said that, do you really feel crypto has a space in the outside world? A lot of people who are already into crypto would definitely argue yes. A lot of people who are not into crypto might say this is something which is a scam, or this is something where you it's a lottery kind of a system where you just make money or you lose all of it. I mean, that's for people who are not aware about what crypto is. There is another set of people where people are aware about crypto but they do not want to invest, considering the risk and the volatility that is involved. Then comes the set of people who are 50-50 into it. They want to invest, but they do not know how to a certain extent, or they want to invest and but they do not know where to invest in. Now, the other 50 is like, no, I do not want to, get into crypto altogether. Although right now, I'll just wait it out. I'll see what happens in the future, and probably then I'll get my assets into crypto. So this is how we have segregation among people who are, trying to know what crypto is, or who do not want to know what crypto is, who despise crypto altogether, who feel crypto is a threat to the banks, it's a threat to the financial system that is well established with fiat currencies, or crypto is something which is totally digital. Not many people would be knowing how to use it, especially the developing and underdeveloped countries. It would be very hard for crypto to penetrate, mainly because of the infrastructure and the technology that is required, where a lot of people would not be aware about it at all. Now, just a quick insight on why I feel crypto would be the future. That's the first point which I will take up. Fiat currency is something which is existing with us from quite a long time. So, why did fiat currency come into existence? If you look at the history of mankind, just quickly going back to the history lessons, I'm sorry, I'm making if this is getting a little boring, but I'll make it quick. Uh, the trade always used to happen with some or the other commodity in place, right? So either you have something with you to barter with, someone else has something else, you just give what you have in excess or what you want from them, you just give it. For a simple example, in the very old ages, I mean, you have a cow with you, and you can extract milk. You give milk in return for rice or any other commodity which a farmer would have actually grown. That's how barter system or trade system used to work. There was no set currency as such, right? So milk could have been a currency, rice could have been a currency, salt could have been a currency, any other product, bread, even bread could have been a currency. That's how people used to barter. That's how the world went initially, and then banks came in. I mean, that is how all the stuff was happening on a decentralized system, to be frank, because that was the first decentralized system which existed, guys. Imagine, that's the first decentralized system, because you only could trade what you had, and whatever you had was only your own. So that is decentralization. No one used to monitor, no one had a set rate. No one had to fix some particular quantity. Like for example, if it is a kilo of rice, then the person who has the kilo of rice or a pound of rice could be able to set the price and say it would be worth 2 liters of milk or a gallon of milk, whatever be the scenario. So it was left to mutual discussions between people to set across a price, and that was the first decentralized system which existed. And looking into that portion, then came the banks or the financial institutions. Once government started coming into existence, they wanted to keep a control or a check on all these barter systems, because that used to lead to unfair trade. Yes, there was a system which was leading to unfair trade. There used to be a lot of gambling that used to happen. Also, there was a lot of monopoly in certain areas as well. They wanted to nullify that and bring some order in existence. That is when you got all these banks in picture. So once these banks came into picture, they wanted some kind of a standardized system in terms of bartering or trading in the outside world. And then came your fiat currencies. So each one now has a different value, be it dollar, be it pound, be it INR, be it any other currency that you take, euro, for example. Each one has its own intricate value, again, depending on a lot of market conditions. I'm not going to get into detail of that. Similar to what you see in crypto, in fact, each coin has a different value, right? As simple as that. So, considering that portion, they wanted to bring some order in place, and that's where you had a lot of fiat currencies coming into picture. Now, fiat currencies are controlled by the government, and sometimes what happens is governments are not so supportive to the people. Simple example, when crypto came into existence and there was a huge demand for Bitcoin, in fact, a couple of years back, a lot of countries as well as banks feared that they would be getting loss of the fiat. They would be out of the industry in terms of capitalization, and because people were going into digital currencies at that point of time, due to lack of knowledge is what I strongly say. Due to lack of knowledge as well as few influential hands which were behind, I mean big hands, okay, not smaller ones. I am speaking of big governments altogether, because their major revenue source was getting lost once people started getting into crypto. Because main reason, they could not adapt to the fast evolving technology, and or neither did they have the infrastructure and the financial structures ready so that they could actually go ahead and get into blockchain. I'll get into the details of what the advantages of blockchain and crypto are in a little while. So please do watch till the end, like I said. So after that, that is when they started, getting back, stating we will ban crypto. Even now, there are a lot of countries who do that. We will ban crypto. We will ban trading. I mean, the bank said we will not be allowing you to purchase crypto. Just thinking of it, I earn my money doing my work. I put it in your bank just because it's the only mode where I can have some transactions made. Who the hell are you to direct me on how I can use my hard-earned money? I mean, the bank is not giving me the free of giving it to me free of cost. The bank is not the owner. Well, that's where it comes. The bank is the owner. If you check any of your dollar bills, the euro bills, or any INR notes as such, it always quotes, that is just a piece of paper, guys, which quotes I so called so and so will will agree to pay the bearer so and so rupees. So whatever fiat currencies that you ideally hold in your hand are just kind of a assurance bonds which the bank is giving it to you for transactions, that they will be, acting as a collateral, and this is just your kind of a contract with them. That's how fiat currency works. So the banks are in total control of it. So that's where they say, I would allow you to use it for this, or I would not allow you to use it for this. They have the right to actually go ahead and do so. And that's where a lot of people actually went ahead and filed petitions all over the world across. Here, especially in India, since I'm from India, there was a long battle that went on. It did go to the Supreme Court, which is the final law level. And after which they did say that it's end of the day, it's the people's money, it's their wish and will to go ahead and invest or spend the way they find it fit. So it's ideally their right to actually go ahead and exercise it. So the banks had to open up, they still have to go ahead and give that out. So I mean, if This is how it is happening in terms of acceptance of crypto. Why do you feel that banks did actually go ahead and say we do not want to allow crypto trading, we do not want to support the blockchain technology? As far as my analysis clearly goes or indicates, first and foremost thing over here, people are not educated enough about blockchain and crypto. A lot of people out there, even till today, you go to any of the big financial institutions, you just go ahead and randomly ask them a question: what is a blockchain? They wouldn't know it. What is Bitcoin? They would know it. So there is a lot of a misunderstanding is what I would put across, which says Bitcoin is your blockchain, whereas Bitcoin is a cryptocurrency, for God's sake, which is built on a blockchain, and a blockchain is a technology which can be utilized in far many ways on a very big advantageous level. So imagine just saying you're paying your taxes again to your government. The government gets the money from the taxpayers. It allocates it to various funds based on the government's expenses. So I'll take just five expenses out there. I would take the government would go into military, the firefighting or the safety purpose, the police, education, and development. Okay, I'll take this five. Uh, I'm sorry, I quoted only four, right? Okay, let me take only three. Yeah, I'll take security, be it the national or personal security. I would take education. I would take infrastructure development. Only these three topics, points. So the government will have to allocate the funds individually across these three departments after your taxpayers' money is being sent to the government. How is it traditionally happening? You go ahead and pay your tax to a certain institution which is again set up by the government. The government will have to reroute those funds from the income tax department or IRA, whatever it is, as per the country, to a separate fund account, and through that again a rerouting has to happen. I mean, there is a lot of rerouting that does happen between these departments when it comes to expenditures from the government side. The major disadvantage over here is one, the amount of time it takes for the money to reach from one side to the other side. Say, for example, from the taxpayer, whatever tax is paid, for that amount to reach the end goal of either of these 3 points, your security, your uh, education, or your infrastructure development, would be a lot of time consuming as well as resource consuming. Why? Because there are a lot of micro transactions or major transactions involved, and this goes across even worlds. It's not alone within a city or a area. It goes on between worlds, right? So you have a lot of offshore companies where the government also owns, right? So taking those into account, it would be days or even months for the funds to reach from a normal taxpayer, whatever you're paid, say $1,000. By the end time it reaches that $1,000 reaches the end point, it would have become almost around 900-ish dollars, mainly because of the transaction fees that's involved in between and multiple transactions that happen during that phase. Going on, what happens or what would crypto change or blockchain technology change? Now, with blockchain technology, you can start writing smart contracts wherein you can program the fund of the taxpayer. Say, if the taxpayer is paying $1,000, I would say 15% of that would go to my safety and security, 15% of that would go to my education, another 15% of that would go to my so called what was it? I'm sorry, infrastructure development. The other 10% I'll keep it as a transaction tax or anything as such. And now another 15% would be against the government's expenses. Now, if you program a smart contract in this way, the moment the money gets paid by the taxpayer through the blockchain network, it would automatically immediately distribute the funds across these three accounts or wallets, as we call them, which enables one, cheaper transaction, and two, immediate fund allocation to all the departments that are out there. Now, this is the brilliance of blockchain, and this is the major advantage of blockchain. And let me tell you, a taxpayer paying his tax would end of the day get to know where his funds have gone. And that is one more big beauty of blockchain, that's transparency. A lot of people are now also quoting there would be money laundering that would happen. You will not be able to trace the account wherever it goes. That's absolutely wrong. You can definitely get in such a regulation in place wherein, see, there are a lot of exchanges out there which are unregulated or do not require a KYC for you to start transacting in their exchange. Those exchanges obviously would not be at liability to provide the information to any of the governments out there. And yes, people can evade taxes, people can do all this money laundering activities over there. But provided we start regulating it, stating each and every account needs a KYC to be done, and that KYC information should be available at exchanges. That's more than sufficient for us. The transactions are tracked. At end of the day, if you want to re-verify, yes, you are able to re-verify. Now, taxation as a system, you wouldn't need to worry about it at all. In fact, even without a KYC, you can still earn taxes. Now, how is that? I'm going to cover that in another video on how the governments can potentially earn taxes without even actually having a KYC of any customer done. Without even knowing who the customer is, they can still earn that their particular taxations. So, I'm going to cover that in another video. Moving forward, this is where the advantage of blockchain lies, and this is where the banks do not want that to be happening. The main reason being, how do the banks survive? It's majorly from the transaction fees that you guys would be paying. Any transaction that you do, a portion of that would go to the bank, and that is when they are thriving. Yes, there are other products from the bank in terms of mutual funds, investments, their own individual projects that they run in terms of infrastructure development. This they would be investing in multiple places, but the majority of the revenue, that how do they get that revenue to invest in those places? That is from us consumers, transaction taxes. As simple as that. So, if blockchain comes into effect, they would definitely not have a steady control, because now each bank can have the liberty to set its own transaction tax levels. Yes, subject to the central governments over there or certain regulated body over there, which will definitely be in favor of the banks, not in favor of the consumers. Trust me on that. So, obvious that you would be paying, and even when it comes to the savings account returns, it sometimes I feel some of the countries out there are giving us the ridiculous percentage of savings bank account, which makes it unworthy altogether to even put a single penny into a savings bank account. It would be much more better that you use your credit cards and probably go ahead and pay those bills, because you are getting a much more reward in terms of using the credit cards out there. I mean, that's how certain cities countries are built up. That's how the banking system is there. So they're all about making profit, guys. So over here, even the banks have a good, big advantage, but like I said, awareness is one major part where people do not want to get into crypto in the first place. Let's quickly go ahead with a few articles which have, probably summarized for you guys, uh, just to give you what the future of crypto might hold. Now, Wells Fargo, a well-known organization, it is now started offering Bitcoin and crypto exposure to wealthy clients. I'll just quickly read the last two paragraphs. I'll leave the link of this article in the description below. You can run through it in detail. I'll just quickly run down to that portion which I feel is important. See, notably, Wells Fargo Global Investment Strategy Team's report on investment rationale for cryptocurrencies is a testament to their understanding of Bitcoin's supply and scarcity dynamics. Now, this is what I mean. People are now getting to understand, because the generation of those guys who are only stuck to that era of fiat currencies is now moving off. We are now seeing a fresh talent pool out there. We are now seeing more awareness to be built up. The younger generation and the mid generation that we have are now becoming more aware about crypto and its usage and blockchain and its usage. That's where everyone wants a piece of the pie. So, there was one more paragraph, guys. Just one second. Yeah. So the first one itself, as you see, high net worth Wells Fargo clients can now get Bitcoin and crypto exposure. A company spokesperson informed Business Insider, making Wells Fargo the latest in a long line of traditionally conservative financial institutions to venture into Bitcoin. You can read this second line again. Wells Fargo, the latest in a long line of traditionally conservative financial institutions. Those are your banks and financial institutions out there. They do not want to get into crypto because they feel that it's a loss for them. But what they're forgetting or losing out here is in terms of usage of technology, which would in, in turn reduce their operational costs and obviously boost their profits. Okay, I mean that's a topic for another day for discussion. There is one more quick line which I want to quote over here. Wells Fargo's Bitcoin venture comes just days after traditional banking giant JP Morgan's CEO said clients see Bitcoin as an asset class and want to invest. Now, this is where I said the awareness is increasing, and that is when people are getting to know the power of blockchain and crypto. If any financial institution or big bank out there do not actually get into this crypto space right now, then they will be left behind in the race. It's as simple as that. The people are becoming more aware than these bank institutions and financial, of banks and financial institutions out there. So they will be losing out the race. As simple as that. And before them in March, Morgan Stanley, that's one more financial institution, I believe, so announced that they too would offer client solutions for owning Bitcoin. Now we are speaking of only Bitcoin over here, but this is just the beginning, guys. Once we see that Bitcoin is offered, other crypto coins will definitely follow, right? So this is an article which I believe was in the month of August. I guess I missed the date, but yeah, whatsoever. It's in August 2nd, 2021. Now, coming down to what crypto would change, look at the amount of users over here. This is from Statista. I'll also leave the link for this in the description below. You can go ahead and check it out. In 2016, it was just 5% of the total population versus millions, I believe. It was 5 million. Yeah, I'm sorry. It is 5 million in 2016 of users in crypto assets. All right. So these may be holders, these may be traders, these may be one time crypto purchase and sell out guys. These things are as well. But users, in the sense, it would be considered as people who are live with using crypto, right? So it went up to 18 million in 2017, jumped again a double, almost a double amount to 35, and almost a triple amount by Q3 of 2020. That's where till this data is around 101 million people are into crypto right now in the entire world. I mean, not even right now, I'm sorry. It's in 2020 Q3. Imagine this has doubled, just doubled. There was a threefold jump over here. I would just put it at the bare minimum of double. 200 million people out of the entire 7.9 billion population out there. We are just 2.5% of users in the entire world, guys. It's just 2.5% users in the entire world. I've just taken 200 million. I mean, you can see the calculation over here. 7.9, sorry, 7.9 billion is the overall world population right now, as far as I've checked on the web. And this is what is the number of users or percentage of users in the total population that we have right now. Just considering a minimum number, it might be more than that. It's an indicative, but I'm just taking only the double of 100. It might be even 100 million more. Just imagine. So the it's just 2.5% of the entire population that is currently using crypto. Just imagine when a lot of big people, big organizations start supporting crypto, understand the use cases then. Having said that, a quick look into the unbanked countries. All right. So why am I looking into unbanked countries? These are the countries, and the percentage ramps up to almost a whopping 21.25 for the entire world. Let me just quickly check that. Yeah, I'm sorry, it is 21.65% of the entire world population is unbanked in a lot of countries. I'll also leave the link of this article in the description below. You can run through it in detail. But just quoting what crypto do to these unbanked users, it would bring them eventually to crypto because you do not require a centralized bank, since DeFi is going to be the next big thing, and that's a part of the blockchain, and that's the beauty of crypto as well. So once DeFi comes into picture, you do not require a regulated financial institution as such to run the operations. Each one of the user will be part of the entire DeFi system. So he or she would be able to transact between them or between companies using the tokens that they own. The transactions would be transparent, legible, easily available in terms of all the details of what transacted to what. Now, regulations can be put into effect, smart contracts can be built to ensure that the money laundering is not happening. You have a lot more use cases which is technically sound. I wouldn't like to cover that up, uh, mainly because it takes a lot of time. Simply speaking, there is a option or opportunity in the world out there for using the blockchain, even in a DeFi space, to regulate things, not in the way that we are currently regulating, but yes, to somewhat have some strong security measures that can be taken up, which will actually give you an option of ensuring that such activities or illegal activities as such would not go through. But yeah, there are a lot many opportunities which can be thought of in terms of security, guys. It's an open area for thought process as well as ideas to flow through. DeFi will give you that particular freedom in terms of owning assets, transacting assets. But yeah, you can definitely build in a lot of security measures into it, again using the smart contracts which are out there. Blockchain has that possibility to be probably monitored or probably built in such a manner which also ensures the safety and security of the individual too. Right now, it's still in the budding stage, but as and when we get more people into DeFi, you would understand what I am speaking right now. DeFi is definitely and will be the future of finance. Trust me on that. So, while big banks and institutional investors spent years trying to bend blockchain for use in traditional finance, they missed out on the boom in crypto prices and the income from decentralized finance. Like I said, awareness plays a very vital role, and they felt crypto is something that they would actually be crypto or DeFi space would ideally get the banks out of their income source. But in fact, like I said, they lost out a lot in terms of income that they could have earned through the decentralization that they could build up. Now, alarmed by stretched valuations and zero yields in conventional markets, they just want in. That's because people now are getting more awareness on the crypto space, and they know what is going to be the future. Now we have more people getting into crypto rather than getting into conventional products. So lesser the number of investors in all your mutual funds, SIPs and all those stuff, obviously the banks wouldn't have their income generated to invest in other such ventures or infrastructure as such, which will yield a very low income for them as compared to what they can actually get here in crypto. Simple example, guys. What would you get out of staking certain coins in some of the websites that are out there paying you APYs of almost 15, 50%, 60%? There are a lot of coins which even pay 100, 120% APYs as well. Those are the incentives that you would be ideally getting. Now, what does a bank do for your savings bank? It's paying you an interest rate. Now, why would you worry about a 2% interest rate when you're already able to get around 100% interest rate on the coins that you hold? As simple as that. Now the banks missed that out. If they had taken or invested $1 million in Bitcoin way back in 2016 or 2015 or 2017 ish age, they would have reaped a profit which was definitely more than 100 to 200 times than what they could have got in a conventional source. Pure mathematics, Bitcoin price, two factors. Bitcoin price, three, Bitcoin staking portion, as well as mining Bitcoin that has been reducing or half. So these are things which the banks actually missed out on a lot of crypto ventures that have come across in the recent years as well. Moving on, I'll just take the first paragraph of this article. I think we will have to register for this article. I'm not registered, so I wouldn't like to go through the detail, but yeah, just checking. On August 20th, 2021, the total market capitalization of all cryptocurrencies stood at 2.02 trillion according to coin market cap. So this is up by 160% from 775 billion at the start of this year, and over 16 times higher than at the beginning of 2019, when cryptocurrencies together amounted to $128 billion only. So look at the jump. Just look at the jump. It is 128 billion in 2019. We are in 2021 right now, and it's 2.02 trillion dollars. So just imagine what 2022 would bring to us. more people, more crypto, more action. And yes, if you are an investor from long term, more profit as well. Again, legitimate projects. So do go check out my other videos which are there for other cryptocurrencies which I feel are good and worthy investments, and why I personally am an investor in those cryptocurrencies as well. Crypto is the future is what I want to conclude with this video as. Fiat right now, yes, but in the upcoming few years down the lane, fiat currency would either get digitally converted. That is what something that should ideally happen, because they should come down to the digital space eventually. One, to minimize the cost of running operations as well as maintaining those fiat assets, because there would be less users to it. I mean, imagine your dollar bills would have no value when people start transacting using USDT, which is the tethered network, or USDC as well. What would happen to those dollar bills? You just would have to burn them, as simple as that, because you have it in the digital storage in the bank. You're just moving that to a crypto DeFi space, converting it, and you're just using that USDT again through the digital platform, through apps or swaps or whatever is the online services as such, or even just digital cards or card payments that might come into existence. You're not at all using those dollar bills in your hand. So what would happen to them? Probably we can put those on the fireplace and burn them as well. Yeah. So just a thought on a lighter note, guys, but yeah, don't please do that. It still has some value, so keep it with you. Having said that, that's where I would like to conclude this video. Thank you so much for watching. Please do go ahead and check out my other videos on reviews of various tokens that I feel are worthy, and certain insights on what I feel on investments which would be good and yield you potential profits. Thank you so much again. Please do subscribe to my video channel. I'll be bringing in more content as such as and when the days go by. I have also made another video for the trust wallet scams and how you can avoid it on a general note. Do go ahead and check that out as well if you're interested. Please do hit the like button and do comment below what you feel personally. Would fiat exist or crypto come into picture? 2022, what would happen, guys? Just put in your thoughts in the comment section below. I'd be very happy to read them all. And do share this video so that we spread the word about crypto to everyone out there and who would like to know more about crypto. Please do let me know on any topics else that you would like me to cover, where I'll be very happy about covering those as well. Thank you so much once again. Have fun.